In this video, we'll be discussing the StockBox's dividend scanner and how it can help you find some of the better opportunities out there in dividend land. If you're someone who likes to sit back and enjoy dividends rolling in over time, this might be a tool for you. So let's jump right into it. What is the dividend scanner and how can it help you find better dividend trading opportunities? Well, let's jump in. So if we take a look at the left-hand column, we have obviously our symbol and we have all the different stocks that we track in the StockBox. Now, what you'll see right next to it is, of course, the dividend yield column. And if we just hover over this, we can see exactly what this is telling us. A stock's dividend yield is the annual dividend payment divided by the stock's current price, expressed as a percentage. It shows how much a company pays out in dividends each year relative to its share price. Now, of course, some stocks pay quarterly, others monthly, but this gives you an idea of an annual basis of what you'll basically receive as a shareholder in the form of just sitting back and holding on to the shares over the course of a full year. Now, another column that is pretty cool is the 5-year average dividend column. What this column shows you is a company's 5-year average dividend, which is the average annual dividend payment per share over the past 5 years. It's calculated by adding the annual dividends paid each year and dividing by 5, giving an idea of the company's typical dividend payout over that period. Now, what you'll also notice here is that some of these are lighting up in green. All that means is that the current dividend yield is higher than the 5-year average. Take, for example, ABT, which is Abbott Laboratories, currently yielding 1.8% on their dividend, which is up compared to its 5-year average of 1.69%. This can be useful for identifying stocks that may be offering higher than usual yield on their dividend. Fair warning, however, usually when the yield is going up, that does mean that the stock price is down. And depending on what type of investor you are, you may be more attracted by that, or you may be concerned as to why the stock price is down. For example, let's take a look at CLX, which is Clorox. And what we can see here is that they're offering 4.13% on their dividend if you were to buy the stock right now. However, the 5-year average is 3.05%. So the dividend looks attractive. Let's take a look at the share price. And here's a look at CLX, Clorox Company. And what you can see is the stock price has absolutely cratered, which is why on a relative basis, the dividend has gone up. Now, personally, I like the idea of buying stocks that are oversold, but this is definitely more favorable towards dividend/passive investors, which is exactly why the tool might be useful to you. The next column we'll be taking a look at is the payout ratio column. What does this mean? Hovering over this icon, we can see that a company's payout ratio is the percentage of its earnings paid out as dividends to shareholders. It's calculated by dividing the annual dividend per share by the earnings per share, or EPS. For example, if a company pays $2 in dividends and has $5 in earnings per share, the payout ratio is 40%. It shows how much of the company's profits are distributed to shareholders versus retained for other uses. Now, what you'll see here is we've also color-coded this. A lower payout ratio suggests that the company is paying their dividend using a smaller ratio of their profits, whereas a high payout ratio, such as AMT, is signaling that the company is paying a significant amount of their profits, or even more than what they're currently making in profits, to pay the existing dividend that they are offering. Why this matters is that a payout ratio that is lower is likely more sustainable, while a payout ratio that is very high has a threatened potential of getting cut if the company runs into some financial trouble and needs to reduce their spending. Remember that there is no free lunch in any sort of investing, and so getting paid dividends does come from the company's profits. So again, it may be worth considering the current payout ratio of a stock that you're looking to buy. Having it on your screener makes things nice and easy. The next column is the ex-dividend date. Now, the ex-dividend date is the first day a stock trades without its dividend. If you buy the stock on or after this date, you won't receive the upcoming dividend payment. It's typically set 1 or 2 business days before the record date, which is when the company determines eligible shareholders for the dividend. This column can be useful for traders who are looking to potentially capture that dividend and move on to the next. That is a very popular strategy amongst a lot of stock traders. Finally, we have a simple market cap on the far right hand to see largest and smaller companies. You can also scan for your favorite stock if, for example, we wanted to take a look at a particular company. Let's take a look at like Coca-Cola. We can select Coca-Cola and we can take a look at its current dividend yield, 5-year average, payout ratio, the ex-dividend date, and market cap. Having a simple screener like this can make dividend investing just that much easier and help out in finding better opportunities. Remember that if you want full access to this tool, you can find it on our website, a1trading.com/stockbox, or found in the description of this video down below. Thanks for watching.